How's it going, everyone? Welcome to the trade recap or market analysis session for April the 29th. So what we did today was we took 3 trades, 2 mini micro trades, which we did profit off of, but I did not consider them on the chart because we were in and out within literally around a minute, and we should not have entered those trades. Those are more of just gauging the market type trades. But we took 1 trade for the day. Could have played out nicely, but unfortunately we did get invalidated prior, which left us with 0.75 realized risk to reward with a maximum of 0.5 risk to reward and even higher, likely 1 to 2 risk to reward. But I'm not mad about the exit. I'm more mad about hesitation, which you will find out later in this video when we go over this trade as well. So first, let's talk about the overall context for the market, and then we'll get into the trades which I've done, and we'll look on footprint as well. So let's go on to the 30-minute, and I'll show you the context. Essentially, we were trending up over the larger ranges in the market, marked our liquidity levels. We did have some supply zones on the 15 and 30-minute, as depicted here and here, but we did happen to break them later on, as we will see as well. And on ES, it's essentially the same. We had our liquidity levels, we're trending upwards, and we did have 1 supply zone there. So market opened up trending and showing expansion towards the upside, right? As easily demonstrated there. Now, we couldn't place any trade from there to there because why? Because today there was jolts at 9 a.m. and other news at 8:45 a.m., which means that if you're taking a 5-minute interval from both times, we can only trade after 9:05. So, keeping that in mind, we broke out and continued towards the upside. Here we saw a nice retracement to the V2 level, I assume. Yep, nice retracement into the V2 levels. And then we continued back up. But then up here at 9:05 or 9:10-ish, we started seeing heavy absorption here on the highs. We started reacting from this 15-minute supply zone up at this top, or you could even consider it a reaction off the 30-minute, like shown on ES. We just wicked out of the 30-minute, like seen here. So it could be seen as an acceptance of that 30-minute supply zone, and potential decent short trending play could have been made there, and I'll show you why. And I'll show you what did happen and what we did take. So from here, it showed acceptance of these 2 supply zones, right? And why did it show acceptance? Well, let's take a look on Bookmap right at 9:05. Shout out to Think with Bookmap and Alex with Think with Bookmap. Great resource. I highly recommend traders to use. So right around this time right here. So what did we start seeing? We started seeing that lots of seller possession was there, and we were creating barrier on the downside and the upside. But what we're introducing much more now is just take a look at these icebergs right here. 7:45 sell icebergs, 5:59 sell icebergs, and now 56 sell icebergs as well. That's all pointing towards the sell side, and one major thing that pointed for the sell side to me from those highs, looking in hindsight of course, is this right here on the footprint chart. Right on those highs right there, what do we happen to see? What we happened to see was, let me delete this real quick, I did not mean to mark it there. What we happened to see was we saw that these highs right here we're showing lots of volume, as you can see right there. Now, this volume, what that shows to me is basically that there was lots of transacting between buyers and sellers going on at that level. And even though we were getting some buying action, price could not hold past this level right here. After this area, price struggled to move higher after that area, showing that there might be passive sellers at the area. And one indication of passive sellers are these icebergs right here. And on top of the icebergs, we also see this liquidity right here. But in this case, the icebergs would have been much more significant as compared to the spread of liquidity, because just looking at the spread of liquidity, we do have a supporting barrier and an opposing barrier. That's why we need to focus more on the icebergs in this time. But understanding that there was liquidity there is a decent sign, looking at how it's following the price downwards as well. Now, from that area, we started seeing sell side start to occur. But I want to talk about what I did, right? Yeah. So what I did was I waited for the break of this on Bookmap, break of the opposing or supporting barrier on Bookmap, and we entered off of the breakage. We entered off of the breakage for the short side, but what we didn't realize was that still there was buying barriers that are still there, but they're not getting broken. But we likely could have stayed in the trade, because look at the spread of liquidity and look how seller liquidity is following us down, while buyer liquidity and barriers are moving down with the price as well. That definitely shows seller strength and buyer weakness. So we entered right here, gauged the market, but unfortunately we did exit around here as we started seeing acceptance of this barrier right here. But we likely could have stayed in and caught this entire downwards move as well, because that downwards move would have been a nice play to catch. And we did all of this at 9:10, not 9:05. We likely could have got an entry on 9:05 if we used footprint in unison with Bookmap and saw the large amount of volume coming in at those highs and alongside the icebergs. Definitely could have been an area of identifiable rejection. Now, furthermore, we started continuing moving to the downside, and let's see if there's any real bar invalidation areas. There we started seeing heavy seller barrier right there. 1,052 contracts. That's very significant. But we're still continuing towards the downside, breaking lower barriers continuously. Now, this likely potentially could have been an area where we may have exited. And why is that? Look how deviated away from this area that we are. We're very far away from this area, and since there's so many contracts up here, it's likely that price may want to revert back. So if we saw exit, it could have been either at this barrier or this barrier, which both of them would have been quite nice. So that's either 55.50 or 55.35. So let's just see how much of a move that could have caught. Say we entered upon these highs right there, maybe even there. Stop loss 10 ticks above, so like 45, 5 ticks above. And where do you target? 55.50. That would have put us around a 1-to-1 risk to reward. Seeing as, oh, we could have actually moved our stop above this barrier at 65, so we could have kept it around 65, 5 ticks above 22. Likely could have accounted for a nice 1-to-2 risk to reward. Now, looking in hindsight, once you have seen such a reaction from these lows, seeing this heavy buyer amount put in, likely could have been an exit around the area. I'm just trying to see if there's any way that we could have held until down here. That's what I'm looking for. That's kind of interesting. If we were targeting these lows right here on ES, potentially you could have caught it, because then you would hold and wait for, yeah, that would likely be what's gonna happen, because when you have such a strong supporting barrier on your side, even when you see opposition like that, you would stay in until you see sign of invalidation. And if you're going to be targeting a level such as this one right here, which is the high impact news, oh, that's actually very, very good. All right, so what do we know about high impact news? We know that typically when there's high impact news, liquidity gets created around it, and price typically targets that liquidity before making the rest of its move for the day. Now, if you look at Jolts went all the way down here, wicked, and then moved all the way back up now. But that doesn't mean liquidity there was pretty much created. Now, if you look at the spread of liquidity, do you see how liquidity is moving down at the price? And we've seen 1,105 passive sell orders just sitting on the order book right there. That's very strong strength for seller support. And that's why this barrier was broken as well. Although we were seeing to see some reaction from there, you likely would not have exited. And you would not have exited because you're targeting high impact news liquidity down at these lows. And since you have such a big barrier on your side, you can simply move your stop loss right there. Unless another barrier has formed here, you likely would not have exited. But you likely would have taken profit at these lows, because that is when high impact news liquidity has been taken. And on top of that, there is a barrier that formed there that does seem to get accepted. And that takes us into our actual trade and our main trade for the day. What we just discussed was a mock trade that we just set up using Footprint and Bookmap, as there was heavy evidence of that there. But this next trade I actually took, and why did I take it? Well, let's look on the 15-minute, right? On the 15-minute on NQ, if we simply just mark out our V2 levels, if you look at where price came down to, it came down to that V2 levels. It came down to our V2 levels once again, right? And we also swept high impact news liquidity on ES. That's one big sign. Second big sign, we're at V2 levels. Third big sign, we are at a barrier, and that barrier is showing acceptance. And after it has shown acceptance, look at what happened to this liquidity right here. It just got taken out of the order book. So now that this selling support has been taken out the order book, this buyer barrier has shown support and has been confirmed by this move up. From here, the move towards the upside should be pretty clear until 5565-ish on ES, unless any opposing barriers form in which there is acceptance or more. And we took the longs on NQ, and it was going our way for quite a bit of time actually. If you look at it, we came right back to those levels, and we did seem to re-put liquidity at this area, but we did not exit there as well, because we did have a supporting barrier. So when the supporting barrier has been broken, that is when we can exit. But if you look at what happened, so our supporting barrier did get broken past that 50% line, which is a sign of invalidation for us, so we did get out around there. But we got out right at these lows instead of in between, which would have saved us a pretty good amount of ticks on NQ. It would have at least kept us at a 1-to-1 risk to reward, perhaps even a 1 to 1.2-ish. But instead, we took a realized 0.75 risk to reward, which is okay because things like this do happen where we do get invalidated. It's better than break even, and it still puts us in the profit. Additionally, it's just like keeping our stop loss, moving our stop loss up. So I'm not mad about this trade at all. I'm actually pretty happy about it. But I'm keeping that in my mind. Keep high impact news liquidity in your mind because it places very important. It likely structures the remainder of the day in terms of market structure and sweeps. Now, there's one more thing I want to do. I want to discuss this on order flow because what I saw up at this area was I was seeing large buyer absorption, but I did not enter shorts there. I was really thinking about entering the shorts, but I did not enter the shorts because I already took my main trade for the day. I don't want to put my profits on the line. But here, I did see a lot of short potential come up at those areas. And let me show you why. What time is it? There. I think it was here. Right around here. You might be wondering why I'm saying that. Well, let's take a look, right? First time we started seeing decent buy bubbles. Second time, look at the size of our buy bubble, right? Third time, take a look at it as well. I think third time might have been the time where we broke, yep. But this right here and this right here as well, that isn't pushing through this high, is all showing me signs of absorption. The one thing that didn't get me to enter was that if we look on the spread of liquidity, there are literally no targets towards the downside for us to target via bookmap. So we don't enter because there's nowhere price would like to preferably target. If there was a big magnet down below, this sell likely would have been taken. Since there wasn't, we did not, and we did it. Another thing is that if we look on bookmap as well, around that area, we started seeing heavy buyer liquidity right up here at the top. Right here, we started seeing heavy buyer delta, and we saw a higher volume up near the top as well, which is all showing signs of absorption. But that is why absorption must be taken into context. You have to know where price may want to target and where the overall areas where price may want to head towards. I did not really see price moving lower for the day because there's no real area that needs to be taken out that is pretty nearby. So we did not enter shorts there as well. But yeah, that's pretty much it. I do want to see if there's any potential to foresee shorts up at those highs, which is around 10:05-ish. Yeah, honestly, even if I saw this acceptance of this barrier right here, I likely would not have entered. Why? Because there's not really a target down below other than this 5,550 area, which might have been the area which we fell short to, which does look like it's the case. Yeah, it's literally exactly the case. We fell right to 5,550. So if we had identified that this as a liquidity level, then potentially we could have taken shorts here, because if you look on footprint as well, what we see at the highs of this candle and this candle is that we're seeing large buyer delta start to come in, even up at these highs, but it's not getting accepted, and we're seeing large divergence between that, which provides us focus towards the short side, since there is a barrier as well and sellers are starting to come in. Shorts likely could have came in, but still I don't think we would have taken it, because if there's more liquidity at 5550, then we would have been more confident to take something like that. But nothing we could have really taken there. And if you look at, yeah, I mean, that's pretty much it, right? We talked over the two trades which I took at 9-10 a.m., how I gauged the market with that, and then we looked on Footprint and Bookmap to analyze the moves that happened in the peak trading times of New York session. And we also overviewed, backtested, and analyzed this trade right here. Showed you guys why I had to exit for a 0.75 realized risk to reward, which isn't bad. Think of it just like moving our stop into profit, and we got stopped out. But, and we also like analyzed that on Footprint and why this didn't result in a move down. And we looked to see if there's any more trade setups on the day, and we did identify that there was one on ES where we could have taken shorts here, placed our stop around this area, targeted for around 1 to 2 risk to reward trade, but we did not take it because we were not able to analyze that in time. But yeah, that's all. Overall, it was a pretty decent day. I'm not going to complain. We had one good trade that put us up on the day, and yeah, let's see how we do tomorrow as well. If you have any questions regarding anything that I've discussed today in this video, please leave a comment down below or join the Discord. The link will be in the description. I highly recommend you to join. Everything is completely free, and there's lots of resources that many traders can use and take advantage of. That's all I have here for today, and I'll see you guys tomorrow for tomorrow's market analysis or trade recap session. And I guess I'll see you then. Goodbye.